Good morning. It's July 8th. This is George Kachuk coming with Know Your Options Inc., coming to you from a CME Group trading floor in Chicago. This morning the market started trading down a bit. Volumes trading tracking pretty much lighter, so nothing too remarkable there. European stocks were pretty much flat overnight. Markets today officially kicks off earnings season with Alcoa reporting after the close. Alcoa is basically a laggard kind of stock, but still viewed as an economic bellwether. And also today, market participants are looking for the outcome of the meeting with the European finance ministers meeting later in the day, again to address the European debt issues. Thus far, the equity market still continue to be in an uptrend. The Nasdaq's able to still trade above the 2,900 level. That's a level we previously identified as a resistance level, which now became support level. The S&P 500 is trading between 1340, 1360 level. That was our resistance area. And basically it got above the 1360 level last week. However, on Friday sold off, and now we're trading at about 1350 level. So on the Nasdaq, we're looking to see if it can hold the 2900 level. If it fails there, we're going to see how it acts around the 2850 to 2800 level. Falling below that might negate the uptrend. On the S&P 500, if it falls below the 1340, might go to 1300, and we'll reevaluate there how the market's acting to determine whether this uptrend's been broken. Now, with earnings news coming out this week, we don't really have much economic data coming out, but one of the things I think is worth taking note of is to what I want to call ignore the news but watch the market. Basically what I'm referring to is since our uptrend started June 4th, we had some pretty bad economic news, but yet the market continues to make higher highs, continues to move higher. So if you let this news kind of mess with your head, you're going to have a hard time discerning what's real, what's not real. So we continue to watch the market because the market is the leading indicator, and it's going to give you an idea of which way equities want to go. Last week, for instance, we had a lot of economic data. Half of it was good, half of it was bad. We had manufacturing data, construction spending, factory orders. Then we had private employment data, and then the U.S. government jobs data, which basically hit the market very hard on Friday, and the market sold off. However, that was the first really hard selling day we've had in a while. The Nasdaq, we'd call, had a bit of a distribution day. The S&P 500 selling came in on a lighter volume. So again, ignore the news, take a look at the market. So now from a fundamental perspective, what we still have is corporate profits continue to climb while S&P price to earnings ratio continue to decline. That has to come to a head. Either corporate profits are going to miss terribly this coming quarter, or the price to earnings on the S&P 500 should expand. According to IBD, the NYSE short interest ratio right now is at a 5-year high. Again, tells you a lot of the negativity that's in the market. People don't expect anything. The 10-year treasury is below 1.6%. Again, just telling you the fear that's out there. But while the fear that's out there, the market continues to act pretty constructively. There's a lot of sectors in the equity market that continue to act well. For instance, the mortgage service sector and home builders. Now, home builders pretty much were left for dead, and yet they're right near their highs right now. Home builders like Lennar, D.R. Horton, Meritage Homes, Toll Brothers, Ryland. All these stocks are near their highs right now, and of course, if you looked at the news, you'd never know it. From the mortgage service, you have Nationstar Mortgages, Ocwen Financial, also near their highs right now. And then, of course, the leading sector we still have in the biomed and biotech. You have Alexion Pharmaceuticals, Amgen, Biogen, IDEC, Seattle Genetics. All these stocks are near their highs. If we pick out some other sectors, let's say out of the leisure sector, Coinstar broke out, still holding that breakout at about the 67 level, broke out to the 70 level, still trading right around there. You have Monster Beverage still acting very well. So all in all, there's a lot of pretty good equities out there. And again, if you focus on the equities, on the action of the indices, you don't need to focus on the news. So in summary, my message for today is ignore the news, watch the markets. And if you have any questions about how we're trading any of these positions we mentioned, you can contact us at knowyouroptionsinc.com. And this is George Kachuk, reporting you from the CME Group trading floor in Chicago. Thank you.